Well, good day and welcome to the podcast without a name. Normally Dougal would be here, but Dougal's in China. So we've got a very special guest today. His name Martin Rogers, who's the current Chief Investment Officer at KTM Ventures, IPO extraordinaire and cryptocurrency expert as well. So we're going to cover a few of those things today. I just wanted to make the point quickly that it wasn't our intention when we started the podcast to make it a political one. It only kind of happened that way, and that's just the way everything kind of turned out, considering the Lib spill was happening, and obviously it was something that was kind of interesting at the time. So the object of our podcast is not so much to get into, Trump versus the deep state or Libs versus Labor. It's more just to kind of talk to interesting people. So we've got one on today. Martin, thank you for coming on.
My pleasure.
On our show, we have a particular interest for people who go out and do their own thing, kind of take risks and do whatever else. That's essentially what your role is. Do you want to kind of tell everyone just a little bit about yourself, how you started off in business or your first business experience? Or
Yeah, sure, Alexander. I just have to say, I'm sitting here with my 6-month-old daughter, Zoe, giving her a bottle feed. So if there are any baby noises, it's from her, not me. So I started out as a university student. I was doing two bachelor degrees, one in chemical engineering and the other one in computer science. And I was your typical university student, had a bar job, maybe a second bar job, or do some catering stuff. And I was living essentially how most people live, from paycheck to paycheck. And my friend at university, a guy named Yaron Shamgar, Israeli guy, we went and rented a flat together, and we, a few months into it, we saw an empty shop in Bondi Beach. The developer wanted $4,000 plus GST a week rent, and so we offered $1,300 a week, and we set on a short-term basis instead of 5 years plus 5 years, which is the usual terms for a rental contract of commercial property. We were rolling 6 months. So, the landlord found somebody who'd pay somewhere close to $4,000. They could boot us out with, essentially 6 months notice.
Yeah.
Now, there was one problem, was that I didn't have enough money for the 4-week bond.
Right.
I didn't have $5,000 in savings. So I had to go get these other, up-and-coming fashion designers. And I went along to Bondi markets, Paddington markets.
Yeah.
And I basically chopped up the floor space to these different fashion designers. People would share the rental, basically a 2 times multiple. I'd get 2% cut on sales, and we called that Bondi Bazaar. We got the sign writer to write a bit like Harper's Bazaar.
Yeah. And
I was making $1,000, $2,000 a week. I'd go in the morning, count the float. We'd have some backpacker girls who would work it, so maybe I was more interested in the girls, I don't know. But it was a decent sort of business, and all of a sudden I found there was this other life out there of the entrepreneur. We had basically 2 backpackers we would pay, and they would call up. We'd just get a list of all of the vets around the country. We'd call up and say, we're calling up from RSPCA Pet Insurance, we'd like to send you some brochures. We redid the brochure, and we got a celebrity who supported the RSPCA, Simone Jade McKinnon. She was on a show called McLeod's Daughters.
Right.
I don't know if your viewers, that old, no, but it was, it was country practice, but for vets. And so we put her on the front cover of this, and we just printed off a bunch of brochures and put a little plastic stand, and we'd call up the vet, speak to the receptionist, and say, hey, do you mind if we put that here? And it was kind of interesting. Pet insurance penetration rate in the Australian market at the time was like 0.6% of pets were insured.
Really?
Yeah, and in the UK, where insurance is much more natural. Insurance was actually invented in the UK. Pet insurance penetration rate was 64%. And Australia has, I think, one of the highest in the developed world pet ownership. So we thought, there's something on here.
Yeah, definitely.
But didn't realize there was a whole cultural barrier to get over. Essentially, Australians don't believe in insurance.
Yeah.
They think she'll be right.
Yeah.
So a lot of people were confused about what pet insurance was. So they thought, if Fluffy the dog died, do I get a payout? Is it worth me, putting a bullet through Fluffy? But, it was really about paying 70-80% of your vet bills. And most people, when Fluffy gets hit by a car, then they hit with a $4,000 vet bill. They go, oh, wow, I wish I was insured. So it was about having that conversation. So that's why we would spend all this. We also, I would make sure I became friendly with the local post office manager down at Bondi Beach post office, and, the excess amount of shipping we'd do at the end of the week, I would basically package that all up, and then we'd put that out there. So, the post office actually doesn't work on per parcel, they work on weight behind the scenes. So he'd work out what the difference was. I would buy a case of beer for those guys for the week, and, they'd help out a up-and-coming entrepreneur. So, look, after doing this, we're making a little bit of money. I was still a university student, I was doing my final year. And it really spurred me on and started thinking about business. So I started reading the Australian Financial Review, and there was an article that was in there about New York Stock Exchange seats selling at a 10-year low. So I thought, oh, wow. The last time this happened, and I spoke to a stockbroker who had this, they made like 25 times their money. The Australian Stock Exchange was the first exchange to list on itself. Right. So there was these were not-for-profit institutions. So just think philosophically, you've got the bastion of capitalism, and it's a not-for-profit.
Yeah.
It's for the members.
Yeah.
So the New York Stock Exchange had been running like this for 213 years. There's 1,333 seats. It paid, either you could trade on the floor or you could rent it out. A bit like a fixed income rental apartment in New York. So you get, I think, $60,000-$70,000 US if you were to rent it out for the year. And that's how these open outcry people would work.
Yeah.
So in this article, there was a guy named Tom Corbell, and he had bought the most amount of seats, and he was sitting on the board of the New York Stock Exchange, Canadian guy in Toronto. So I called him up. I went down to got a calling card, called Canada, and spoke with him. And he paid the highest amount. He paid $2.7 million US for a seat, and now they're going about $950,000 US. Okay. And there's a big fear with everything going electronic, the whole open outcry system would be gone.
Yeah.
So, he was able to get me an allocation to buy 4 seats, so I had to go raise this money, and I didn't know how to raise money at the time. So,
that was one of the things I was going to ask you. Is for people who are they've got their idea or whatever, they want to build something, they want to make something. How raising finance is obviously a difficult part of it.
Yeah, well, I learned really the hard way, because I spent maybe 4 or 5 months trying to raise money, and I had no idea what I was doing. I didn't even own a suit. I was just making all these mistakes, and sort of people weren't taking me seriously.
Yeah.
And anyway, it didn't happen, and for me to raise the money. But what did happen was New York Stock Exchange listed on itself, went up 25 times.
Yeah.
And it really hurt me, because I knew I was something on a winner, and I thought it was going to be the best opportunity I ever had in my entire life.
Yeah.
And I was really down on myself, and I thought, you know what, I wanted to move out of Bondi, and I wanted to put on a suit and go do what's called corporate advisory, help out with finance. And there was one person who believed in me, thought I was good to do. So I went and joined the guy who was a lawyer, and he's doing some corporate advice, a little boutique place. And he would do the junior mining companies on the ASX, and he had a few biotech companies.
Yeah.
So that's how I got into what I did next. And I understood biotech from my chemical engineering part, university. So it was a very, very interesting transition. And at about 12 months into doing that, I ended up taking over a company. It was really on its knees in 2007, a company called Prima Biomed.
Yeah.
It was about $0.005 at the time. And so through myself, I took basically all my savings and some other people. We did a rights issue for $1.8 million and really turned it around.
You did a what, sorry?
A rights issue. So you can underwrite a rights issue. So it gives everyone who's a shareholder the ability to buy shares.
Yeah.
And the people who don't buy the shares, they get given to the underwriter, and the underwriter has the option to take that up.
Okay, cool.
So that was something I did, and became a CEO for 5 years.
So did you identify that company as kind of a target company almost, or did it just kind of fall in your lap a little bit, or...
I saw
a mixture of the both?
I saw a structural way in which a rights issue was put together with the options rights issue, and that was sort of attractive to the smaller end brokers.
Yeah.
And I also saw on the other side there was some really good assets, and I thought cancer immunotherapy is where the future is going to be.
Yeah.
So they had 4 assets, and the company was trading, at a few $1 million market cap, like 2, 3, 4 million.
Were these assets like IP assets, like patents?
Patents, and they had some clinical trial data.
Yeah.
So it was some interesting stuff. It all came out of what was called the Burnett Institute in Melbourne. So they'd spun out this, and they'd gone through a bit of a scandal in the past. So, there was the ability to do a turnaround. So I effected a turnaround over the space of 5 years as a CEO, built a team. We raised around about $100 million. The stock went all the way up to around about 42 cents along the way. From there I made my first decent set of money, and I left that in 2012, and I got married. My wife got a stint with the Wall Street Journal, so moved to New York, and I invested in and started working with a hedge fund out in New York called Lynn Partners that made some money out of Prima Biomed, in terms of being an investor.
Yeah.
And that's when I went on the other side of the aspect. So I went from scientist, university student to little tiny startup entrepreneur, going into the stock market end, doing the management side of things, and now I've gone around to being into the funds management end and how the investor works. And I thought, some investors would make like $10 million, and if you're a CEO, you might get, if it's a good week, you might get $300,000, $500,000 a year. But in this fund management end, it was really, really neat.
Yeah.
Now, admittedly, $10 million is given to the investors of the fund, not to one individual, unless you own 100% of the fund.
Yeah.
But it was something I saw, there's some real leverage, and something I kind of wanted to do. I wanted to take what I understood in terms of technology and science and merge that with capital markets. And, it was sort of a journey to find out what you wanted to do, and that's what I did. It all came from sort of real disappointment and not being able to raise capital at first.
How much of your early experience running those early businesses do you think contributed or helped kind of later on when you're running your first kind of biotech company, and then into the hedge fund as well? How much did you take a lot from those early experiences, and were you able to apply that later on, or was it kind of you're still kind of learning as you're going, and it's like this kind of ever shifting? Malleable type of thing. Yeah,
absolutely. You learn so much. You learn, I think, running a little tiny business, when Lehman Brothers collapsed and the GFC hit, I really needed to crunch down on expenses in late 2008, early 2009. So I just called up all the suppliers and I said, look, it's either you're going to take a haircut, 25, 50%. I named that haircut to what we owed our creditors, or, we're not going to pay you, we're going to put you on the end. It was basically a little bit of a threat, and everybody agreed. The only one who didn't agree was the ASX on their listing fees. Obviously, if you had your listing fees, it's either you take the payment or you're not.
Yeah.
So, and that was fun actually. Being able to, preserve cash flow and wade through a storm when the capital markets turned, I was able to do really well from that. So it's kind of like a really good experience from that, and I realized there was time when you could apply capital and other times when you need to preserve capital. I also realized how much I didn't know and how poor I really was, I suppose, as well, through that process. And I got a really sort of humble appreciation of those people who go out and apply themselves within a business. I really accepted that.
So then obviously I guess that kind of evolves naturally almost into venture capital. You've had experience, I guess, in a hedge fund. You've had experience running your own companies, dealing with, I guess, clients and investors. It's almost like a natural fit, I guess, moving into kind of venture capital, would you say?
Yeah, so I came into venture capital for taxation reasons.
Yeah, I was going to ask you about.
So the government put in place, I don't know if you remember, in 2016, there was this whole innovation ideas push, and so in 1st of July 2016, Parliament put in place legislation allowing investors who had what's called an ESVCLP, Early Stage Venture Capital Limited Partnership. You wouldn't pay any capital gains tax, income tax, and you get 10% rebate off your income tax bill. But you had to incorporate as a limited partner, general partner. You couldn't have more than 30% of the fund. You had to have a minimum of $10 million committed capital.
Okay.
So I had to apply a skill set I had there and I go, great. But I knew that I was investing before an IPO of a company. So if I could do this 3 or 4 years later, then I wouldn't pay taxes on the other side as well.
Yeah.
So that was kind of really, really neat.
So that's kind of, I guess, how you got into it. You're still there.
Mm-hmm.
What have you kind of? Well, do you want to tell maybe like what's the? Obviously, you have different kind of venture capital funds with different objectives, kind of different set of. Like some are very early stage, like kind of seed capital almost, varying all the way to kind of later stage.
That's right.
And then but you're, from what I understand, kind of somewhere in the middle. Would you say? Yeah.
So it's sort of the pitch you have to investors, but you think of it as if it's your own money and what's the sort of edge that you can provide. So like the edge we can provide is, we can get into a company quite early stage on, help them go to the next level in terms of incubate up the management and corporate governance things that they need to do. So corporate governance means stuff on the board and bringing auditors and new processes and risk management style. But also, after you do all of this, then having something that would be ready and presentable for the early stage of being a stock market listing. So that's sort of like liquidity. And like we wouldn't sell on the first day after the IPO, usually sell within the first couple of years.
Okay.
So, there was that point in time. So like that was really sort of the edge. And it was hard to explain because, venture capital comes in many different flavors, as you pointed out. And we didn't really want to change how we invested and how we were making money. We just wanted to take advantage of this tax structure, so we had to articulate that to investors that were coming in. Like you need to put a presentation deck, PowerPoint of what you're doing, and you take the format what everyone else uses, I suppose.
Martin, you wrote an article, I think it was in the Australian Financial Review, and basically it was saying that Bitcoin particularly is safe, sustainable, and here to stay.
Sure.
Do you still believe that? Are you still kind of long on cryptos, particularly Bitcoin?
Yeah, so Bitcoin was the first cryptocurrency, and the reason I wrote that article was actually Elmer Funky Cooper wrote an article about how Bitcoin was just tulips, and it's just used for criminals and money launderers. Now there's a few problems with that. Like firstly, he'd just been the CEO of a company that got the biggest money laundering fine in Australia. And the second thing is there's a public blockchain behind Bitcoin, and you can see all the transactions.
Yeah.
So some academic work has shown that how it hadn't had that impact and wasn't used for money laundering. And the third thing is, tulips was actually a bit of fake news. What happened in 1627?
Really?
Yeah. So there's only 27 people who traded a tulip between 300 guilders to 5,000 guilders. And people were shareholders in a company called the Dutch East Indies Company, so the first company to be floated on the stock market.
That was in Amsterdam as well, wasn't it?
Yep.
That was the original stock exchange.
That's right. So the people who were the shareholders were so wealthy, to show off your wealth, you had a little tulip on your table in your kitchen and things like this. But there was a drought in 1627. So if you were really wealthy, you really showed off, you got yourself a tulip.
Yeah.
There's also a future market in tulips because you could take the bulb but not germinate it and germinate it the next year. So It was a kind of a weird sort of thing. Anyway, someone wrote like a joke article, a bit like The Chaser or Onion, about it at the time, and then it was sort of this myth perpetuated. So that's why I wrote this article. And what I did was I got some quotes, one from a guy named Marco Santorini, who was at International Monetary Fund, talking about how it was just demonstrably false, that it's just used for money laundering, and also from Professor David Yarmick, who a Harvard professor, and got quotes from both these guys, and actually put some parts around it. It's also interesting. Bitcoin had been long enough in the tooth for it to be able to survive as well. It wasn't the first digital currency, but it had a real breakthrough to it. So I talked about breaking the Byzantine generals problem.
Yeah, what is that problem? Because I saw that and I was wondering what that was.
Yeah, so basically it's a bit of game theory and computer science. So for the computer science nerds, it's really out there, and essentially it's a theoretical component that there's the fort, and everyone's trying to get into that fort. So you have multiple different armies that need to attack the fort all at once. But amongst these different armies, one of the generals could be a traitor. So how do you get a message to all of the generals to attack the fort at once and not have that compromised? That's called the Byzantine generals problem.
Right.
So what Bitcoin did was it invented a thing we call blockchain, and it put the same ledger of what was transacted to prevent what's called double spend, because you're in the electronic world of electronic money. And what it did was it duplicated that database in many times in a peer-to-peer fashion.
Okay.
And then a consensus algorithm would go through and make sure that that ledger or that database contains the same items. And one that didn't, or something that would have fraudulent, would be rejected. So that's how the Byzantine generals problem was solved using the blockchain. And it was a real breakthrough because it means you could do real-time transfer of the Bitcoin with next to no fees. And so it spawned an entire area of other cryptocurrencies, but also technologies based on the blockchain as well.
Cool. Would you be able to, obviously, I feel like, particularly in the past, I guess, kind of 18, 24 months, cryptocurrencies has just been kind of the thing to talk about.
Sure.
And also for people to invest in with kind of not a real substantial idea of what it actually is. That was the impression I got, was that everyone was talking about it, but not many people knew actually what it was or how it worked. You saw that kind of these massive returns coming out of over extremely short periods of time, and kind of everyone just jumped on.
Yeah, sure. And look, so I touched on it in the article, and I basically said, look, most of what Bitcoin and cryptocurrencies used for right now is speculation. Speculation is not such a bad thing, because for something to be transferred, it needs to have value. And how do you find that value? You find it through speculation. So, it's this real chicken and egg that comes out there.
Yeah.
And I think the second thing is, from what you want to do in terms of an investment mantra is, look, if you want to have a little bit of cryptocurrency in your portfolio, you need to think about everything else that's in your life. And, do you have a savings plan? Do you have an investment plan? And, cryptocurrency should be a very tiny part of your portfolio. No one should go in and pour everything into cryptocurrency. And I think there's another sort of weird thing that's happened is that it's an asset class, as cryptocurrency is, that was first encountered by and made money for by retail investors. So usually institutional investors get in, and then they hear it's heard about in the media, and then the retail investor comes through. So the reverse thing happened here. So it opened up a lot of questions about, who should be investing. Sophisticated investors, usually it's run by, developed world governments like the SEC in America or ASIC in Australia, and they say you can only buy if you're a wholesale sophisticated investor in Australia. It's called Section 708 of the Corporations Act. In the US, that has the same sort of thing. But here, you had and basically said, look, to speculate and make money, you can only be rich in the first place.
Yeah.
There's sort of a nanny state that happens with
Sure.
this. So with cryptocurrency, because it wasn't put under the guise of regulators, because it wasn't seen as a stock or a security, it kind of fell in between a security and a currency and a commodity. The people who made money out of it were the pure retail. So there's a whole bunch of questions that are raised up here. Now, I think it's quite evolving now. Goldman Sachs invested quite heavily into a cryptocurrency exchange called Polynex through a fintech they own called Circle. They spent $400 million. So they get the audit firm PwC to come behind it. And then they go see the regulators, the SEC, who say that you need to be a FINRA broker-dealer with an alternative ATS license. So basically all of these sort of regulation gets heaped on top of it, and the establishment players are coming into it. So it's kind of interesting watching the whole space evolve, really.
I feel like kind of as well, it's because I guess by nature it masks people and the way that they transact. And that's kind of the whole nature of, I guess, a cryptocurrency, is the idea that you can't really see who's on the other end.
That's actually not true.
Really?
Yeah, so cryptocurrency is not anonymous. It's pseudo-anonymous.
Right.
So if you've onboarded yourself, so if you purchase with, say, Australian dollars through an exchange that's KYC'd you, then that transaction is stored on the blockchain and it's there forever.
Right. Okay.
It's one of the biggest myths out there. Actually.
Really?
Yeah.
Okay.
So don't do anything illegal with cryptocurrency, folks.
Really? They can still find it?
Yeah, it's there forever.
Wow. Okay.
And there's people in jail right now, including FBI agents who have stolen cryptocurrency are in jail from this.
Really?
Mm.
Wow.
They stole it from Ross Ulbricht from the Silk Road. And when they prosecuted him, they found it was a Secret Service agent and an FBI agent that had stolen it.
Yeah.
When they actually first did the analysis around the public blockchain of Bitcoin.
Wow.
Like I said, there's lots of misinformation out there.
Yeah, that's what I'm saying. Well, I mean, that's exactly what we're here for. This is, to kind of bust these myths. Where do you see, I guess, the future of blockchain? Because obviously, every day it seems like we see some industry, some new firm incorporating blockchain, not just in kind of cryptocurrencies or whatever it is, in kind of some other aspect of business and everyday life.
Yeah, so basically, where there is people who are sitting in the middle, taking a big middleman fee, and it can become electronic, a blockchain in theory could solve this. So a cryptocurrency is basically a public blockchain, so it's decentralized or quasi-decentralized, and it's put on a peer-to-peer network. And people are remunerated by mining or maintaining that network to do that consensus to see all of those transactions are verified. And there's a private blockchain, which is just run by, say, a corporation, and that's essentially a database. And why would you go about doing a database? Because parties may or may not trust each other.
Okay.
That's on the other side of things. So a lot of corporations are testing this, piloting it, but it's still very early days at the moment. And you need to have sort of buy-in from both the corporate or the political body to do it. But look, at almost every sort of aspect where you need to have a central depository or a database, it could be a good benefit from it. On the other side, maybe it would just help organizations, governments or corporations update their databases. Maybe that's the other thing to do it. You can be skeptical and bullish at the same time. It's quite a funny thing.
Really? I do find it interesting. I mean, you read kind of governments cracking down on cryptocurrencies, exchanges particularly, and I've also seen kind of the price of a lot of these currencies.
Yeah, so
correlated to kind of the regulatory.
I think when you hear governments cracking down on it, like some governments are very totalitarian in nature. For instance, China banned cryptocurrency exchanges, and they have a really big problem in terms of money going out of China. They want to stop money going. It's not about a money laundering issue. It's just they want to keep money inside China. So there's capital controls. Sure. You can't take more than $50,000 out of China at one point in time.
Yeah.
And if you're part of the former regime and you've obtained your money, God knows how, and you want to move it out, they've made it very, very difficult. And cryptocurrencies, they're borderless, so it's able to then to move it out, and it's without permission, or it's what they call censorship resistance. So China really cracked down on that, and they banned that September last year. But like, say, a country like America, they haven't banned the cryptocurrency exchanges. They're quite actively encouraging it. However, they want things monitored, like KYC, AML, and where those sort of governments really crack down is, like I touched on beforehand, they don't want, with the new coins, what they call ICOs, they don't want them marketed to investors, particularly unsophisticated investors, because when people lose money, which they eventually do, they turn to the government and complain. So those sort of governments, like the traditional Western governments, they see it banning from that side of things.
Okay.
Well, not banning, but they want to, control it, and they want either people to lodge a prospectus, for instance, or you need to be clearly that it's not a security. So there's that element to it as well.
Do you think there should be kind of more or less regulation in terms of cryptos as a general rule?
Well, so there's different kind of cryptos. Firstly, say Bitcoin is not deemed to be a security, for instance, in the United States, so that's fine. You can buy and sell Bitcoin, and you can use it for transactions. You can, as long as you KYC yourself at a licensed exchange.
And KYC is about know your customer.
Know your customer, yes. So that's where you show your ID and who you are.
Okay, cool.
And that's why I said beforehand, if you've bought Bitcoin and KYC'd yourself, and you've done something illegal, I don't know, knock on.
Or drugs on the Silk Road, or
That's
guns
right.
or something.
You could look back at that blockchain. You could show that transaction, that point back to an exchange, and that exchange would send, with this person is Alexander Cameron.
Yeah.
Great, and he lives at this address here. You're probably standing there holding your ID in that picture.
Yeah.
And they'll come knock on your door. So that's how they want to view it. I actually think, and then you have that's for like Bitcoin. But then say there's a new coin. So some of these coins are sort of circumventing the standard way in which you'd raise money for a security. So if you call it the Alexander coin and you wanted to raise money to fund your podcasts, if you didn't construct it right, then it actually would be a security. You're just circumventing it. And that's fine. You just say, look, I'm just tokenizing, or I'm creating a cryptocurrency out of my security. But you'd have to raise money for that in the first instance with a prospectus.
Right.
So that's where the government sees those regulations.
Okay. That is interesting. Do you have much kind of exposure in your day-to-day at KTM to cryptocurrencies, or?
Actually, no. And look, I've got a diverse set of investors. So some are pro cryptocurrency and some are anti, and it's a bit like religion. Actually, it's kind of funny how people can be so anti it. So I just have to be careful, and so we're just a little bit conservative. So we bought an exchange. They make money as each time someone trades it. They make about 50 basis points.
Yeah.
So they're just sort of the middle piece of infrastructure. In the mining boom, they call it picks and shovels. We invested in a blockchain company called Identity that does a private blockchain, first customer being HSBC. So they attach the anti-money laundering component called the purpose of payment. They automate that. So when you do your internet banking with HSBC, that is put in as an attachment on that message, the Swift message that goes across. And that's got to do with Swift computers, which I can really bore your listeners with something really nerdy about.
No, the nerdier the better. Nerdier the better. I remember when you came in to you guest lectured at my finance lecture. You said the first thing, by the way, I describe myself as a bit of a nerd, so I'm just super into all this stuff, so I don't really care.
Well, so the Swift message, it's built on 130 characters, and it's a standard since 1973. So you can't put too much information across there.
Yeah.
But how banks message to each other and do the settlement of international money transfers has to be done through this messaging system. So they have really good ways in which they can balance the monetary value, but the thing that they haven't kept up with, because it started in 1973, is the ever burdensome requirements from the regulators about showing that the money is not being used for funding terrorism, money laundering, and so forth. So you need extra information from that. So banks have built systems around this, and this was just a blockchain additional solution that could be just overlaid on top of the Swift message.
Cool. I bet our listeners hopefully will be going home and looking at Swift and the how banks message each other and all that type of stuff. Now, just finally, because I guess we've kind of covered most of the stuff that I was keen to cover. I guess this is kind of two parts. What does a day kind of in the life of Martin Rogers look like now? Or a kind of a day in the life of a CIO of a venture capital firm look like?
So I think, we look at on average, about 2 companies a day. So we take a meeting with those 2 companies. You just have to sit and read a lot of information. You've got to and then you also have to spend some time with your current portfolio companies and helping with their company growth or development. So that's typically what my day is. It's about 1/3 to 1/2 my day on the phone.
Really? That's interesting. Do you like it? Like, is it? I guess you'd have to kind of love it in a sense. To do it. You get all these guys who are coming in, and they've got their idea, they've got that they've been working on for however long, and they like.
And you have to say no a lot of the time.
Yeah.
So it's hard dealing with that, and sometimes you like something that's really good, but might not fit your fund.
Sure.
Or you might see another way in which you could do it, but you don't have the focus or energy to do it. So it's really complicated about the reasons why you're doing these things, and sometimes you just miss out on things.
Yeah.
And the third thing is, you can really want something, and you're not the venture capitalist or the investor that they want at the end of the day. And that's even worse, because that really hurts you. Like, that drives your ego insane.
Sure. How often do you get that? Because I mean, I feel like it would be more of the time they'll take what they can get, or is there some some kind of businesses that
it's just pot lucks, but it's probably happened to me half a dozen times in the last 12 months.
I guess it keeps you kind of hungry and focused, I guess.
Yeah, and also I'm probably not the top VC out there in terms of a name, what people want on their register as well. Like I'm kind of an unknown. I'm relatively new.
Who are the top guys?
Oh, look, in Australia, you couldn't go much further past Blackbird. In America, Andreessen Horowitz, so Sequoia Ventures, there's some really good firms out of America that people really, really would like to say. And it's a bit of an ego thing, saying, I've got Sequoia as my investor.
Yeah.
Cell Partners, we've done really well in Australia. So, that seems like you've made it as a company if you take those guys in.
Sure.
So I want people then to suddenly think KTM Ventures, you've really made it by taking us as an investor.
Sure, but I guess it's also, there's still a long way to go once you've got the funding. Like what percentage do you reckon of the ones that you take on, or just in general, if you don't, in general kind of don't work out?
So if you're generally as a fund manager, if you're winning 60% of your investments, you will have a superior outperformance long term.
Yeah.
So that's what you have to really think of. And there's a whole bunch of portfolio theory. It's been done academically about this. When you're really small, you can be quite selective, but as you scale, like if you want to take in $100, $200 million of venture money and scale that, then you have to go more towards that portfolio theory.
Yeah.
So I'm on the smaller end, so the investors who come in the first 2-3 funds, they make extraordinary outsized returns because we have to be so picky in who we can come into. But then it doesn't work on another level of scale.
Is your kind of return structure similar to that of a hedge fund in a way, like you kind of say?
No, we're a classic venture fund, so we just return money on cash basis. So when we cash out, usually within 3-4 years, then we return that money to investors.
Okay.
So a typical hedge fund, you'll get priced daily or monthly, and you can sell the units in the fund. If you buy, say, a long-short fund, for instance, credit fund. So, we're classic committed capital, we're more private equity venture capital fund in that instance. Okay. So usually you get higher returns, but it's not liquid.
Right.
Like that is for the investor.
Okay. Cool. Now, what would your advice to kind of someone my age or younger than me, or kind of yourself, if you were looking back on it, I guess, 20 years ago? Or...
Yeah, so I say if you want to go and be an entrepreneur, I'd say go do it. I think, have a shot at something. I find the best entrepreneurs that we see are ones who have a little bit of domain experience. So they've gone and worked in a certain industry. So I had a guy came in our office this week. He worked project managing cranes coming into building sites and thought, instead of putting stuff up on a whiteboard, I want to go do an IT company in the base of this. He had good contacts, so he knew all the different building construction managers for all these building sites in Sydney and Melbourne. So he knew that the problems that they had, if there was wind and the crane couldn't get there, then they had to get the sand and the cement and all these other things. So if there's a better way to coordinate it, and people receive a text message all at once, and it was pretty neat. So he had already built out a series of contracts, and he went and built that, and he looked like a Maori crane operator, but he was a guy that took an idea on a building construction site, being there for a few years, and applied that into as an entrepreneurial business. So, if you've got some domain experience and you can do a startup, I think that'd be really good. So if someone's younger, I'd go work for somebody, or even work for a startup. Get some good ideas from there. Like, it's very rare that someone comes out in the age of 20 and boom, has the new breakthrough thing. But also, don't be disencouraged. I started out younger. You get age discrimination, and you just have to deal with it. I suppose, there's a whole Me Too and all these sort of movements out there, but I remember quite painfully at the time being very discriminated because I was young and told I couldn't do it. So think about that. If you do have that skill set to do it, that the people who really are successful start really young and do that. So you think like Bill Gates, Mark Zuckerberg, Jeff Bezos, all of these people have done really well quite early on.
Yeah. Cool. Well, I think that pretty much covers it. Wanted to give of course, a shout out to our sponsors, My Style Suits. If you need a suit rental for a job interview, a formal, delivery in 1 to 2 business days, $80 or $100 for a 2-week rental. So thank you to My Style Suits. But more importantly, thank you to Martin Rogers for coming on the podcast. I really, really appreciate it.
Thanks, Alexander. And if anyone reaches out, I'm on Twitter, Martin F. Rogers.
Yeah, perfect. Awesome. Thank you, Martin.